Okay, welcome out to our market update here on a Wednesday, September 2nd, 2015. This is Coach T from TackleTrading.com. Welcome out there to everybody. I want to kind of go through the markets real quick, take a look at what happened today, and also take a look at what is expected for the next couple of days. Got a long weekend coming up here in the States with Labor Day, so keep an eye on that and remember that. Market had a big update today. You know, the Dow was up 1.8%, NASDAQ 2%, S&P 1.8%. Strong across the board. 9 of 10 sectors were up. Technology had a big day. You know, they led stocks higher. The advanced decline line, mostly stocks were up. You know, you had the advanced number 2200 and the decline number about 790 on the New York Stock Exchange. We did get an August ADP employment report come out below expectations. That looks like 190K compared to the 210K. China's Shanghai, which had been selling precipitously recently, was only down 0.2%. As we look through the day, you know, kind of strong into the close. Let's take a look at the heat maps. I do like the heat maps every day. They're a great way to understand what's going on. And heat map, here we go. Okay, coming up. There we are. Green, green, green. Look at that. Few red symbols kind of sprinkled in the basic materials and energy sector. Some of the utilities were also down. A few random companies here and there, like Dollar Tree was down some, but mostly up. I mean, Google, Apple had a huge day, 4%. I mean, after getting beat up the way it had recently, you know, snapback rally would, you know, probably do. Let's take a look at the futures market. 4 symbols I think you got to look at every day, maybe even 5. One of them is the S&P 500. Now for today, started out in the morning, we were up a little bit but then dropped. Found a bottom. Towards the end of the day, we took off. Even after hours, you saw it extend that rally. Now we're about the same price as we were when we closed today. If we also look at the volatility index, on the day, just down. I mean, it opened up when the market stabilized and go up like that. VIX is going to come back down. Let's go back to a daily chart on this one. Still quite high historically, you know, for this market, it's still really high. There's still risk in the market. The assumptions by institutions out there is that we're going to see movement in the month of September. So get your popcorn ready. And let's take a look at energy. Crude oil, one of my favorite commodities to track. Old support, new resistance playing in here. Had a big snapback rally late last week, earlier this week. Then it turned down, green candle. Now here we are heading at about $45. We're pinned. I'm looking for some direction one way or the other from that. Didn't really get it, you know, this week. We got volatility, but not a real clear direction. Let's take a look at the metals market. Let's look at gold. And gold. It's a tale of two trends. You know, long-term downtrend, short-term uptrend, compression pattern in here. Old support at 1150. Could be developing in as new resistance here. I'd be cautious. Gold should have done better, you know, recently. It's an interesting one. It's a head scratcher. I think a lot of people out there are wondering why not? Why haven't the precious metals really bounced back with the market risk? Usually they're a bastion of safety. But it just can't find its way. You know, it's up a little bit recently, but not too much. And then the last one is the U.S. dollar. If we look at the daily charts here, it's interesting. The commodity currencies, Aussie, New Zealand, Canadian dollar, all down. And you got pullbacks on the euro, the yen, the Swiss franc, and the pound. The U.S. dollar had a little bear retracement. You know, it was going up, sideways, broke down, bear retracement. Here we are sitting at old support. This U.S. dollar chart, you know, when you pull it back and you look at the big picture, I'm talking like monthly chart, long term, where you've been for the last 20 years kind of stuff, we've seen intermittent rallies. You know, it'll rally for a couple years and sell, rally for a few years and sell, rally for a few years and sell. Rally for a few years, sell, rally for a few years. It cratered between 11 and 14 during quantitative easing when they were really ramping that up. Took off in 2014. I wonder if we're kind of at the tops of this range here. It's interesting. It's going to be an interesting back end of 2015 for the dollar and for the currency markets. Let's take a look at the calendar, economic calendar for the rest of the week for the U.S. markets. And Thursday, international trade number, jobless claims. Friday, you've got the employment situation from the Labor Department. Take a look at this one. Anything out of the Labor Department regarding jobs is going to be important. Go in and read through this if you want to know more about it, if you want to understand some of the jobs report and what actually comes out of that. Okay, this has been Coach T from TackleTrading.com. Quick reminder, if you're part of Tackle Trading, get in the clubhouse and go over there and participate with a conversation. The Women in Trading blog that we just started, where we're encouraging women traders to network with each other. Forex Pip Talk, talking about Forex. Vegas Strategy Talk if you're an option trader. Commodities if you trade commodities, so on and so forth. If you're a legacy student, get over there and make sure that you're communicating and talking about it and saying hello. If you have questions, this is a great place to post them, because you got a great team here that does trade and is active, and got great coaches that can help you. All right, guys, get in the game.
Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.